Hey everyone, it's JJ at Micro Futures doing a little video on chart replay and how that can help you, just like watching game film in football. Learning there are certain things in markets that will repeat themselves over and over and over again. And I want to show you, so you want to learn how to short, right? Learning to short is a little bit difficult because you got to be able to spot a seller. Using the chart replay, simple 1 minute candle. Now I've put volume profile on here. It's not absolutely necessary to have it, but I'm doing so for educational purposes to show you where the position is. So I'm going to start replaying the chart. I'm playing it at 10 times speed. It's a 1 minute candle chart with volume profile, right? It's Sierra chart for those of you who aren't familiar with it. Great, great replay. So I'm playing it at 10 times speed. And we're watching to see how a market starts to liquidate. So what happens here is you've got a distribution, right? The market grabs inventory and then sells it at higher prices. But after it does so, it has to put itself on sale and come back to these areas of cost basis. Why? Because you just run out of buyers. People don't buy forever, right? People want a deal. So you're going to watch this now and you'll see when the high of the candle starts getting lower and lower, you see how these two 1 minute candles have the same high? Now watch the next candles as they develop, right? I don't even remember, but if they can't take out that high, that means that those sellers are still there. Let me make this a little bigger. Now hang on a second. Do you see how these candles, the seller has moved down? So the seller was here, or sellers, plural, right? Then here, then here. I always say seller because in a penny stock, there's usually only one seller, and that's me. So, see that? So, when you establish, say you had taken that and you'd gone, oh, you know what? 48 was a level I was watching. There's a seller stepping in there. It's only been a couple of minutes. You don't have to short the top. Say you get short here at 45, 46. You can go and put your stop above the tops of these candles, right? And then as if you were short, say 46, right? You've got your stop up here. As the seller comes down, you can either move your stop lower in a market that's got some decent selling. And as long as that offer, the red line, does not take out your stop, you're okay. You're okay to still be short in the trade. Now, do you notice? Let me pause again. Watch that red line in this area here. I'm going to make this real big. See how it just popped over that level? The seller has moved down again. They're competing. They're competing to capture the buying. When they take out these lows here, you're going to see the next candle. As that candle opens, the seller is going to move lower, or the group of sellers. This is how you can use a chart replay to understand the mechanics. These are the mechanics that happen. God, they've been happening for thousands of years. Okay. And it's the same thing. It's accumulation and distribution. After distribution occurs at the highest price, the product is put on sale. That's just simple business. So say you had still been short 46, you could go and cover in the 40s. Now, it's not, you know, you're not going to the Gulfstream dealership after this trade, but this is a way that you can trade and get paid. If you're short 46 with a 48 stop and you're covering in the 41s, in the 40s, you know that there's going to be a little bit of responsive buying when we get to this level because that's where the next size cost basis is. That's where we went sideways, right? So let's keep playing and see. So if you had covered 41, you made 5 points, 6 points, a couple of contracts. That's not bad money. Seller moved up. They started to compete again. The next candle opens. Look at the top of that candle, right? So even if you'd want to stay short a little bit longer, you're still short 46. Maybe you were short 10 contracts at 46. Stop 47, 48 on half and half, right? and you covered half of your 10 spot at 61.40, right? Well, you can put some bids down here at 37 and a half. And if you get filled, beautiful. If not, just take the offer and, close it out, right? As long as the seller keeps stepping down, you're okay. Now watch, see? They've cleaned out that seller. Those sell orders are done. Now let's see who steps in, right? Because the sellers want to get more for their product. So as soon as the sell orders are done, they're going to raise prices and then they're going to start competing again. And that's how you watch price action. There, blue line right there at 37. If we break that, see, look how we came right to it and stopped right at the top of that cost basis. None of this stuff is coincidental. So now the seller, if you say you went long down here, that's where you're looking for selling competition at 42, right? If it can't take out the top of those candles, the sellers are still going, right? Now, if we take out 37, there we go, right? You move that down, watch the offer, right? If the offer gets back above it, that's where they're going to initiate again at 40, right? For sure, they're going to initiate there because why wouldn't you? You sold there before, like not even 3 minutes ago, right? I'm thinking how people who sell size think. The candles are representative of that. As long as that offer is coming down, right? That's you trend line traders with that downtrend. That's the offer moving lower, right? Next area of support you're going to be looking at. If we can't get under 37, look down here at 33, right? Watch. As the market comes down, if you can take out that bottom of that candle, we'll crack the 34s. If not, we'll start to rotate back up over 37 because the sell orders finish. The market goes up to find supply, and whammo, that's when, if you're a size seller, that's how you distribute size. You let them come in for it. You think, oh, the selling's over, right? Let's buy some. And then as soon as you get there, boom, there's a wall right there, right where you expected it. You expected it there it was, right? This way you can educate yourself on why these candles are created. None of this is random. Look where that candle came to. Now, I just started doing this. I didn't actually look at the chart and do it. I just picked a top and did this using chart replay. This is how you use chart replay to enhance your trading, right? Give it a shot, right? Replay the chart, watch it. Pretty soon, all those trades that you screwed up on, all those trades that you entered too early, all those trades that you entered in the wrong direction, it's going to make sense why those trades didn't go in your favor. You're going to start trading in the right direction. You're going to get stopped out less. Learn your craft. Okay. I'm JJ. Come visit us at Micro E Futures for common sense trading information. As you can see, it's a simple 1 minute candle chart, couple of lines. You got volume profile on there, but you don't even need it, right? You can just trade simple, right? Trade simple. You don't have to pay for any fancy software, right? In mathematical modeling, the sellers are moving price down, go short, right? When they stop selling their product, cover, right? It's simple. Build a trade thesis around that, build an execution plan that takes into your account risk. So we were short 46. Our stop was right there. If this seller went bye-bye, why would we be there, right? Say that the market came back up to 47, 48 and started taking out the tops of these candles. Well, the seller's seen buyers and they're going to raise price. Why would you be short? Common sense, folks. Thanks so much. Let me know if this video helps, and we'll see you soon. Bye for now.